In this video, I'm going to explain what a holding company really is and reveal the 3 most powerful ways you can use this structure to protect your assets, reduce your taxes, and build generational wealth. If you own multiple businesses, invest in real estate, or just want to shield your valuable assets from lawsuits and creditors, understanding holding companies could be the difference between losing everything and preserving your legacy for decades to come. I'm Santiago Cueto, board-certified international business law expert and best-selling author, and I've helped countless entrepreneurs and investors structure holding companies that have saved them millions in taxes and protected their wealth from devastating lawsuits. Today, I'm going to break down this powerful business structure in simple terms and show you exactly how to use it. Let me start with a story that illustrates why holding companies matter so much. Imagine you own 3 businesses, a successful restaurant, a small manufacturing company, and a few rental properties. Without proper structure, if someone slips and falls in your restaurant and wins $1 million lawsuit, they could potentially go after your manufacturing business, your rental properties, and even your personal assets. Everything you've worked to build could vanish overnight because of one incident at one location. Now picture the same scenario, but this time you've structured everything properly using a holding company. That same lawsuit can only touch the assets of the restaurant entity, while your other businesses and properties remain completely protected. That's the power of understanding how holding companies work. So what exactly is a holding company? Well, simply put, a holding company is a business entity that exists primarily to own other companies or assets. Think of it as an umbrella that holds multiple subsidiaries underneath it. The holding company doesn't usually produce goods or services itself. Instead, its job is to own, control, and manage other businesses or valuable assets like real estate, intellectual property, or investment portfolios. Some of the world's largest companies operate this way. Disney, for example, is technically a holding company that owns everything from theme parks to movie studios to merchandise companies. Each operates as a separate subsidiary, but they're all controlled by the parent company. This structure provides incredible flexibility and protection that you simply can't get with a single business entity. Now, the holding company structure works by creating what lawyers call corporate separation. That means each subsidiary is its own legal entity with its own assets, liabilities, and operations. When properly structured and maintained, the debts and legal problems of one subsidiary generally cannot reach the assets of a holding company or other subsidiaries. Now, this separation is what makes holding companies so powerful for asset protection. Now, let me show you 3 specific ways you can use a holding company to transform your financial situation. The first way is asset protection through business separation. This is probably the most valuable benefit for most business owners. Let's say you operate a consulting firm, own a food truck, and have started an online retail business. Without a holding company, all 3 businesses are interconnected, meaning a lawsuit against one could threaten all of them. Now, with a holding company structure, you create separate LLCs for each business, all owned by your holding company. Now, if your food truck gets sued because someone gets food poisoning, that lawsuit can only reach the assets of the food truck LLC. Your consulting from an online business remain completely protected. This separation can literally save your entire business empire from one bad incident. Here's a perfect Florida example. Many real estate investors in Miami use holding companies to own multiple rental properties. Instead of owning all properties in one entity, they create separate LLCs for each property, all owned by a Florida holding company. Now, when a tenant gets injured at one property and sues, they can only go after that specific property's LLC. The other properties remain untouchable, along with the investor's other assets. Now, the second way to use a holding company is for tax optimization and financial efficiency. Holding companies that own 80% or more of these subsidiaries can file consolidated tax returns. This means the profits from one subsidiary can offset the losses from another, potentially reducing your overall tax burden significantly. Let's say your manufacturing business has a great year and makes $200,000 in profit, but your restaurant struggles and loses $50,000. With a properly structured holding company, you can offset that profit with the loss, meaning you only pay taxes on $150,000 instead of the full $200,000. This single benefit can save you tens of thousands of dollars in taxes every year. Additionally, holding companies provide incredible flexibility for moving money between entities. You can load money from profitable subsidiaries to those that need capital, creating interest deductions and moving income to where it's most tax efficient. This level of financial control is simply impossible with separate, unrelated businesses. Now, the third way to use holding companies is for estate planning and wealth transfer. This is where holding companies become truly powerful for building generational wealth. Instead of owning businesses and assets individually, everything is owned by the holding company. This makes transferring wealth to your children or heirs much simpler and often more tax efficient. Here's another Florida example that shows this perfectly. A successful Tampa family owns multiple businesses, including a chain of auto repair shops, several commercial properties, and a small manufacturing company. Instead of each family member owning pieces of different businesses, they structured everything under a family holding company. Now, they can easily transfer shares of the holding company to the next generation, rather than trying to divide up individual businesses and properties. This structure also provides incredible privacy benefits. In Florida, when you own real estate through a holding company structure, your personal name doesn't appear on public records. This keeps your wealth and holdings private from potential creditors, competitors, or anyone else who might want to know what you own. The holding company structure also makes it much easier to bring in new investors or partners. Instead of selling pieces of individual businesses, you can sell shares of the holding company. This gives investors exposure to your entire portfolio while maintaining centralized control and management. But here's what most people don't understand about holding companies. They're not just for massive corporations. Any business owner with multiple income streams, real estate investments, or valuable assets can benefit from this structure. The key is proper setup and ongoing compliance, because if you don't maintain the separation between entities, you could lose all the protection benefits. Setting up a holding company typically involves creating an LLC or corporation to serve as the parent company, then establishing separate entities for each business or asset group. Now, in Florida, this process is relatively straightforward, but the ongoing management and compliance requirements are crucial for maintaining the benefits. You'll need separate bank accounts for each entity, proper documentation for all transactions between the companies, and regular meetings and record keeping to maintain corporate formalities. This might sound complicated, but the protection and tax benefits usually far outweigh the administrative requirements. The holding company structure isn't right for everyone, but if you have multiple businesses, significant assets to protect, or complex family wealth to manage, it could be one of the most valuable business decisions you ever make. The asset protection alone has saved countless business owners from losing everything to lawsuits, while the tax benefits can add up to enormous savings over time. Understanding how to properly structure and use holding companies can literally transform your approach to building and protecting wealth. Whether you're separating risky businesses from valuable assets, optimizing your tax situation, or planning for the next generation, holding companies provide a level of control and protection that's simply unavailable through other structures. Now, if you found this breakdown valuable and want to learn more strategies for protecting and growing your wealth, make sure to like this video and subscribe to my channel. I regularly share insights on business law, asset protection, and wealth building strategies that can help you navigate the complex world of business ownership while keeping more of what you earn. I'll see you in the next one.